Hello friends, welcome to Ecoholics YouTube channel. My name is Avinash and in this video I'll be discussing with you economics current affairs for 24th October 2024. So let us call this lecture a China lecture, right? Because both the articles that I have selected for discussion are basically focusing on the India-China relationships, what has happened in the last couple of days. So we'll be looking at pretty, very focused manner what's happening in China so far as relationship with India and so far as what's happening in the Chinese macroeconomy, because whatever is happening in China is going to have a significant impact on India as well, right? So let us start with the discussion. Yep. So, so there is this new border pact which we have agreed upon, right? So there is an agreement on patrolling their common border, and this particular agreement is significant. Why? Because Prime Minister Narendra Modi and President Xi Jinping, they met for a bilateral meeting after 5 years. This meeting occurred while the broader BRICS summit was taking place, right? And as a part of that BRICS summit, we got this opportunity to have this bilateral meeting, and yes, we have been able to arrive at this border pact. Okay, so that should ease up some tension along the long India-China border, right? This is something which we must keep in mind in all our answers going ahead, that irrespective of what may be happening at the border in the last 5 years, trade between India and China, the bilateral trade between India and China was generally unaffected by it, right? That is what you can see in the numbers over here, that China is our biggest trade partner across all countries. China is the biggest, right? Let us go step by step. So how significant is this border pact? So definitely this is the first step, a desirable step in the right direction, right? Relationship in general has been on a downtrend since the Galwan clashes happened in June 2020, right? So bilateral engagements, they came to a halt, right? Meetings were not happening and so on and so forth. So this agreement, it is basically a starting point. Like I mentioned to you, right, that this agreement happened in a meeting, or this meeting happened on the sidelines of the BRICS summit in Russia, right? So this is this new thawing, right? Your relationship is unfreezing. This word thawing, 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 this word is being bandied around quite a bit since yesterday. You must have also come across the same word, right? Basically means that the relationship is coming out of the deep freeze, right? We have multiple problems in our relationship with China. One of the major problems is the aspect of the unsettled border, right? So we have 3,379 kilometers of border. It's not very clearly demarcated. We have one interpretation of what the border looks like. They have another interpretation of what the border looks like. And because of this, there are problems. So there are certain territories which we want to call ours, which they feel is theirs. There is no agreement on what is ours, what is theirs, right? And that's where the problem lies, right? So for instance, the border is not very clearly demarcated at this point of Galwan in Ladakh, right? So that is where the clashes happened in June of 2020, as I mentioned above. Of course, our trade with China is massive, and it is massively in favor of China, right? Because India is exporting way less to China. India is importing a way lot more from China, right? There are other geopolitical factors which cause a strain in our relationship. Historically, China has had an all-weather friendship with Pakistan, which is obviously something which India is not very comfortable with, right? Apart from that, China looks at our relationship with US with a lot of suspicion. India has been growing a lot close to US, a lot close to Japan, right? India is a member of Quad. So that's basically a grouping between India, Australia, Japan, and the United States of America. All these four countries are democratic countries. They are countries which are, aligning themselves for having a peaceful Indo-Pacific to counter the rise of China in the Indo-Pacific and so on and so forth. So there are explicit and implicit agendas of Quad as pursued by China, and definitely China doesn't look at Quad as a very friendly grouping. and definitely China is not very happy that India is a part of the Quad, right? So it's not just China who is doing XYZ things which is making this relationship strained. In China's perception, India is also doing a lot of ABC things which is causing a strain in our relationship, right? So the idea over here is that there are a lot of factors, whether you want to look at it through historical lens, whether you want to look at through the geopolitical lens, right? There are a lot of factors straining the relationship. Now coming to the trade relationship aspect, right? Like I mentioned that irrespective of the weather in the relationship, trade is enjoying a very healthy growth. Chinese imports fortunately or unfortunately crossed this $100 billion ka mark in the previous financial year. The overall trade is standing at around $118.4 billion. We have exported poultry $16.7 billion to China. We have a burgeoning trade deficit of $85 billion with China. So in the first 6 months of financial year 24-25, trade again grew by 12%, right? China has already sent US to the second position and become India's largest trading partner, is something that you have to establish in your answers. What about investments? So this is again a very hot topic since the economic survey mentioned this idea that rather than importing goods from China, let us invite investments from China. Let us establish factories in India held by, let us say, Chinese interests, and let those factories produce in India. So rather than importing, if we can get value addition done in India using Chinese FDI, so that will create jobs in India, that will give a boost to GDP in India, that will give a boost to exports from India. So we will get a number of benefits for ourselves if we are able to attract the Chinese FDI into India. Of course, the jury is still out on this matter, whether the government of India is comfortable with this kind of an approach or not. In almost all likelihood, government of India is not going to give an okay to this idea anytime soon, or even if the okay comes, it will come in a very narrow range of sectors which may not be really attractive for China. We need to see how this plays out, but the way things stand as of now, China isn't in top 10 investing countries in India, and this is not a surprise at all because we are not really encouraging a lot of FDI equity inflows from China, right? So the idea over here is that India, like for instance, India came out with this press note 3 and said that all the countries which are sharing a border with India, land border with India, we will be requiring a specific government approval for any kind of FDI coming in from these countries. So who are the countries sharing a land border with India? Countries such as Pakistan, countries such as China. Of course, Bangladesh is also there, Myanmar is also there, Nepal is also there, Bhutan is also there, but how much FDI are they anyways capable of sending? It's primarily China that we are talking about over here, right? So you cannot take the automatic approval route for granted. This automatic approval route at one point of time used to be called as the Bombay route or the RBI route, right? So this automatic approval route is available for other countries but not available for China. So we cannot directly target China. We cannot say that देख China तेरे से investment आएगा तो एक extra approval लेना पड़ेगा as per your WTO rules. You cannot do this. So that's why we created this roundabout way of saying that all the countries having a common border with us, blah 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 blah. It's basically for China, right? In July 2023, government rejected a $1 billion investment by China's BYD, which is the world's biggest electric vehicle manufacturer, right? This is an important example for you to quote. Okay, so this is about our investment relationship, because whenever you are speaking about economic relationship between two countries, you cannot just speak about trade, you also have to speak about investments, right? What about does India need Chinese investments, right? Again, the jury is still out, right? So we were not even discussing this topic until 23-24 economic survey batted for it, right? So they say that it's better to receive FDI from China. They say that it is better to make these goods in India, right? So we will become a part of the global supply chain because of this investment, right? But for any of these things to materialize, there has to be a reduction in trust deficit. There has to be a sunshine on the otherwise frosty relationships between India and China. That's what needs to happen, right? Until and unless that sun shines for a longish period of time and there is a broad and a deep sense of trust wide ranging issues के ऊपर there is trust, we will not be able to achieve what this particular economic survey edition is trying to, envision, that we will be able to attract investments from China. Right. So this is my one part of the discussion. Another part of the discussion is again based on China. Right. So we want to discuss first what's happening within the Chinese economy. Right. So China's GDP in the July-September quarter, right, July, August, September, it grew at the slowest pace in the past 6 quarters. If there is a slowdown in China, there is a massive problem that we need to be worried about, because China is not going to just slow down, and accept the slowdown. They will keep producing, and they will keep dumping goods upon other countries' markets. For example, steel, which is exactly something that we discussed a couple of days ago, right? So that's why we are discussing this over here. So slowdown in the world's second largest economy, it will definitely have knock-on effects, right? Your dominoes will collapse elsewhere one way or the other, right? There will be impact on the global oil market. There will be impact on the global spices market, right? So let's understand what's happening. So the Chinese government, they announced a stimulus package in September. And because of this stimulus package, apparently there is a decline in India's stock market. Because the moment this stimulus package was announced, foreign portfolio investors, hot money that they are, chasing overnight returns, started shifting money out of India, started shifting money out of a variety of different emerging markets, and started pumping crazy amount of money into the Chinese stock market, right? Because of course the valuation of stocks in that particular market was also very attractive as compared to what was prevailing in India and what is prevailing in India. That's a separate problem, that our stock markets are in an overbought category for a very long period of time now. Leaving that aside, since this stimulus package was announced, there has been some kind of a sell-off in the Indian stock market. Again, that's not our agenda, right? So the government, definitely Chinese government, announced a stimulus package in September, right? Analysts expect that obviously it will take time to actually see the impact of the stimulus package on ground, right? And obviously this decades of blazing growth that China has enjoyed, to put this particular phrase in context, right, throughout 90s and good part of the 21st century, the first 2 decades, China has been growing at either double digits or near double digits growth, right? The GDP, Chinese GDP has been growing at either double digit or near double digit growth, pretty fast growth, and sustained momentum over a very long period of time. So this slowdown, right, apparently appears to be more long-term slowdown. It is not a cyclical slowdown. It's not as if that okay, acha, chalo, theek hai, the economy has slowed down in this year, probably a couple of years thoda sa slow chalega, फिर उसके बाद we'll pick up. Because you have to understand that they were growing at breakneck speed for 25 years plus, and there is limit to that, and that limit is probably what China has reached, right? So global economy will have to adjust to this new long-term reality, is what the idea over here is, right? Now if you look at India's exports to China, so that fell 23% YOY in August to just $1 billion, right? So that's the idea over here. India's exports to China, they have now fallen for 6 consecutive months, right? So India's merchandise trade deficit, goods ka trade deficit with China, is hitting new high, because we are not going to slow down our imports, because there is a strong growth momentum in the Indian economy. Okay. And since we need to produce, we need to buy raw materials, and raw materials many a times happen to come from China. So whether it is manufacturing of dyes, whether it is manufacturing of pharmaceuticals, or whether it is manufacturing of anything else, right, which we are manufacturing, a lot of the raw materials, a lot of the intermediate goods are coming from China. Given the fact that our demand momentum and our export momentum, thankfully, is not on the negative side, right? Hence the raw material requirement is always strong. So we are importing from China at a crazy speed. Export is something which is struggling, hence the trade deficit with China is only increasing. It's not as if that Prime Minister Modi can do anything particularly about it. It's not his problem, right? So trade deficit, it was $41 billion for April to August period, and year on year basis this is a 14% increase. So India's trade deficit with China in these 5 months accounted for around 1/3 of its total trade deficit, right? Meaning that trade deficit is a major problem, right? In the sense that yes, it is increasing. Imports from China, they rose to their highest monthly level in August to $10.8 billion, right? So we are doing our best to give a booster to the Chinese economy. We are importing from them and we are hardly able to export to them. So we are helping them in every way possible, right? We are good neighbors. Okay. Weak domestic demand in China means that its exporters, right, they will seek to make greater inroads into foreign markets. Read this as dumping. You can read this as dumping, right? Because they have created mega factories. Those mega factories need to be kept operational. डोमेस्टिक डिमांड तो है नहीं, तो क्या करेंगे, बनाओ माल और बाहर जाके बेच दो, जो भी भाव के अंदर बिके, क्या फर्क पड़ता है, राइट? लेट अस डिस्ट्रॉय इंडस्ट्रीज इन अदर कंट्रीज, let us completely cripple those industries in those other countries, and once those industries are crippled, once their capacities are down, then we will be the only suppliers, then we will increase our prices, and then we will make a profit, right? Simple, very simple to understand, very simple to implement, right? This is China's GDP growth, right? It has come below 5% in 8 of the past 11 quarters. This is the problem. Again, you have to understand the size of the Chinese economy has grown quite a bit. They are still growing at 5%. Some would say that in itself is an achievement, right? So the growth numbers have been below 5% for some time now, right? The real estate sector in China has imploded in the sense that there is only so much demand for residential units, there is only so much demand for roads and highways, there is only so much demand for hard and soft infrastructure, right? So the idea over here is that real estate helped the growth of China as much as it could, but now there is a limit to it, right? There is government debt, which has also weakened infrastructure investment, right? That's also a major factor. Banks, they have become wary of lending to both these sectors, so probably it will take some time, because once there is a problem in the real estate sector and the government is indebted, it takes roughly 5 to 6 years to clear out this mess, right? It clears itself out, but it takes time, right? So we have to switch to a mode of growth that is driven less by investments, less by exports, less by real estate, and more by domestic household consumption. So China needs to make this transition, right? And looking at their track record of managing challenges, they may be able to just manage this one as well, because as you know that there are multiple sources of demand, CIGX. So right now, crazy amount of investment, government pumping money, and obviously you being able to export anything and everything across the world was creating a very strong demand momentum, and you are still getting that 5% ka growth one way or the other. But if you want to go from this 5% to something else like 7% or 8%, you want this to start firing, right? Because this is not going to work in China's favor endlessly. Other countries are sitting up and taking a notice and taking steps, right? So this is not going to work endlessly. This cannot work endlessly. This cannot work endlessly, right? So ultimately the momentum, long-term momentum now for the next 25-30 years will probably come from consumption demand, right? Apart from that, there are sectors such as electric vehicles, battery technology, जहां पर थोड़ा सा focus China कर रहा है. They are creating massive capacities over there as well. So let's see what happens. Export pullback, right? 7 of India's 10 exports to China have declined this year so far, right? So what is it that we are good at exporting to China? Iron ore, petroleum, seafood, vegetable oil, human hair, granite, ferroalloys, spices, peppers, cotton yarn, right? You can see that we are deeply in red in most of these categories, deeply in red, right? So these growth pangs, it's hurting Indian exporters, right? Our numbers are coming down. That's something that we have established, right? Iron ore, India's biggest export to China, has declined from 1.15 billion to $882 million, right? So definitely the export of granite is coming down. The export of stone material is coming down because the real estate sector is hurting in China, right? Cotton yarn ka export has come down in a very big way. That is probably very helpful for the Indian textile industry, who will be able to get competitively priced yarn, because if China is not an important market for yarn manufacturers, they will have to probably sell more in India, and that means that domestic availability will go up and prices should come down, right? Oil slick, incremental Chinese oil demand has been tapering, right? Year on year change in oil demand from China, right? So you see that the oil demand is coming down, right? So India's petroleum exports to China, right? So they rose 14% in April-August period, right? So International Energy Agency, they are saying that at a global level there will be a weakness in oil demand, crude oil demand, because of the Chinese slowdown, right? So the idea over here is that this will definitely have an impact on prices and demand, right? So the idea over here is that questions are there whether other countries or regions can replace the demand, and probably not, right? So this will impact refining margins of Indian refiners like Reliance Industries, Indian Oil, right? Chinese slowdown will be hurting these industries, because if they are bringing in crude oil, processing and selling to China, and if they cannot do that anymore, right, then that means that they are also losing out on the market share over there, right? So we have been able to highlight from an exports point of view, from an imports point of view, from the overall trade point of view, as well as from the investment point of view, right, what's happening to India-China relationships. We are not just looking at what happened a couple of days ago, let's say in Kazan, between India and China, in terms of the the new border agreement, but also the larger impact of the Chinese slowdown upon the Indian economy and a variety of different sectors over there. This is our discussion for today. We'll meet tomorrow again and take it ahead. Thank you so much. All the best, and Jai Hind to all of you.